Whenever if I tell you that there is a hidden pattern that actually predict the high probability, very high probability, and I'm gonna tell you what probability is that will happen a crisis now, okay? Or we are in that situation, we are going to that happening now. So this is a is pretty much is when, I don't want to be is dramatic, but it's 100%. And I don't believe in 100%. So that's why I want you guys to tell me if I'm wrong, please let me know. So I want to make sure that you actually get that clear. So what does that mean to 100%? It means I have found that happen in 5 occasions, a particular pattern or combination of patterns that create a crisis, okay? 100% of the time. So we're gonna go into details now, and it's not exactly oil spikes and red cat lines. A line is just a combination of something else I'm gonna show you in a minute, okay? So we're not talking about of these those two main components, or the oil spikes. Now we know with the war on Iran and the cat rates is the last happening, something already been explained before in a video, or explain that now in more details, okay? So how do I come up with this? I've been studying the last 100 years of the global economy, and I have actually discovered that happened in 17 occasions, okay, that we have crisis. So this predictability is just based on data, so just on pattern recognition, okay? So now, and mainly is aggressive central bank rate cuts. We do not have that yet, okay? We haven't have that, but we have what is called a cuts, and we have 6 cuts so far on since we started. What does that actually mean, cuts? Somebody's cutting interest rates, is why is doing that for? The main reason is that the economy is not doing amazingly well, and you need to make it breathing. You got inflation, you got things not very well, and you need to reduce the money you take from the economy, and you want the economy to breathe, okay? That's how I understand it myself. I'm not expert in economy, but I can actually understand that way, that people are. Now the other way around is the economy is doing very well. What happens? You take some money from the economy. Some people make very well, make a lot of money, and take some interest rates start to go up. Now, if it's flat, it can be go both and that. But pretty much is that the economy is doing okay, it's doing well, they don't do amazingly well, and you want to have a stable economy and see how the economy breathes, okay? So this is how I look at it. So sometimes you go period of flat, sometimes up and down, and this is the reasons behind. I can understand myself, okay? From the actually sharp spike oils is something else that we're gonna discuss later, okay? Now, so rate cut has been drastically is an alarm for me, okay? So if it's happened more than 6 times, it's actually high probability that we'll have, and I go video about that in the channel, about this particular situation, that more than 6 cut is for me a high probability that we're gonna have a crisis. I don't know when, I don't know how, can take 6 months, can take a year, I don't know, but I become into defensive investor, okay? And the probability is quite shocking for me. Let's talk about all interest rate cuts. Okay, since 1900, 14 times happened that more than 6 cut, we got 82% probabilities to have a crisis. But it's a big but, it's still 80% that is not happening. Okay, so you need to be I'm carefully doing that, and for that you need to be able to understand this is actually may also happen, may not happen, because you still have the 80% that didn't happen, okay, in total of a few occasions, okay. Now we're gonna go for the next one, which is quite interesting. Now we're gonna go jumping into oil, yeah. Now when this is where it happens. So when let me see if I can say the word correctly, geopolitical situations, yeah, can I even say catalyst, you got when actually oil is start to go down drastically, is because more crisis, recessions hit, and demand is crashed, and the oil price fall. So this is happening because the economy need to actually recession is being hit, and this is actually the demand is going down. That is like the offer and demand is actually going in the favor of against the oil, and start to drop it drastically. And this happens 71% of the time through those 17 crises, okay? Now, we are not going up. So we're not going down, we're going up. So now what we're going to talk about is that 29%. So, but before they're going down, they need to go up, okay? So we're talking about the 29%. We are now on the 29%. We haven't have the aggressive interest rate cut yet. And what I'm thinking is the sequence look like is that by 29% of the time it happens, we're going to give you the data, the proof data in a minute, is that when it spike up, then you got massive cuts, the interest rates start to cut drastically, and oil start to fall drastically too by 71%. So if it's not going up, we'll not have these cuts, we don't have this oil dropping down, but now we're going up and drastically. Okay, so now how precise is this? Okay, so when combine two together, the aggressive interest rate and the crisis blueprint, all this is actually what happens. How precise is actually this happens? So we're gonna go into something more into details. It's happened in 5 occasions, so 5 crises, and there is no exception that didn't happen. So what is the meaning of that? The meaning of that, this is the blueprint, is that what been for me is 100%, which I don't believe already. I already explained that. I don't believe this is actually possible. So, but from 1914 to 2008, we got the World War I supply shock, oil embargo, 1973, 1979 Iranian crisis, Gulf of War, 1990, and 2008 we got a financial crisis when the barrel went up. So what happened in all of them, the oil went up, spiked crazy, and then went down, and we need to go massive interest rate cuts after. But we already have 6, more than 6. When you go past 10 in all the other cases, we move into 92% probabilities, just to let you know. Okay, so that become absolutely danger that we need to make sure. I'm talking about danger as an investor. You need to obviously, it's amazing to find this blueprint, but hope and run, and we don't have any crisis. I want to live a nice life, and I don't want to have any problems, and I want to everyone live happy ever. But it look like this is incredible that may happen. Okay, so let me show you something else. Okay, so now let's think about this for 1 second. So let's see steps will happen. Yeah, we're gonna go into details. So the first, geopolitical oil spikes, energy start prices to go up crazy, and then we go step 2. So inflation start to go up, and that's what you heard a lot in the news, that people are scared about this situation. And what happened? Because the inflation start to go up drastically, oil is up, everything is more expensive, you cannot spend more, then the economy start to slow down, and they squeeze everything down. So then situations have to be up. So then countries start to take measures, yeah, if it's possible, if you're not going through more drastic situations. But then we go to other steps, and this is what happens in those steps. We go step 4, central bank start to take actions, and they're going into more cuts, but more aggressive cuts. Maybe actions instead of 0.25, they go for 1 point down, which is actually quite drastic. This will be like a 4 cuts for me. Every half cut or every quarter cut is an important cut, yeah, but it can be very drastic. We are in 6 now. Now, if we go one aggressive one, that is a problem. Okay. Now, and this is the evidence and risk signal. This is the signal, is a proof of that. Now, the step 5, recession start to officially arrive. Okay. So then oil price typically collapse, and that's what we're talking about. That in 5 occasions it went all the way up, and then it start to go down drastically. Myself, I'm into oil, and I'm looking forward to hit $150. I've been actually invested since the Venezuela situation. I not recommend it, and don't advise to anybody invested now. It's too late, it's not possible, it's just forget about it, because it's way high volatility, and you don't know if it's gonna go up or down, it's gonna disappear. You need to know what you're doing, and I am not advisor or recommendation anything. Be sure that you're clear on that. So just aware of this is my own investments. Okay, so I believe it's gonna go to $150, and it's all that for the current situation of what's going on with Iran. That's nothing to do with the crisis. It's going to hit us, I believe, on this data. So if you see there, in 1973 we got a total of 6 cuts, and then we got a 1979 7 cuts. But if you notice, that charts are trying to do a peak and decline, spike and decline, and then you got the last one, 2008. It was actually 10 cuts, and it was $147, and it went down to $35. You see, to go before they're going down, they need to go up, and this has happened again and again. So we're talking about that happens 5 times. Okay, so now when this is happening, as another thing is quite important, is that how long it lasts, this process of the start to the end. And it actually be not to the end, to start the crisis, pretty much. It's like it's between 12 to 9 months historical duration of the spikes and the drops. So we are just first week on the war on Iran. So we don't know how long it's going to last this, but if it's going all the way up and we go to $140, $150 in the next 6 months to 12 months, this 12 months to 18 months is based on the last 5 crises happening up and down. Just be aware of that, okay? So I just try to make this slide easier for all of you to understand a simple way of what actually are the steps to be followed. A crisis playbook. Yeah. So oil spikes, inflation start to pick up, spread everywhere. Central banks start to create interest rate cut drastically. Yeah. The recession start to hit, and demand crashes, and on the last step is actually price collapse. So if you go oil spike, it's the first step to see if actually will be price collapse, which is the end. Okay, be aware of that. So next slide and final one, guys. So now my question for all of you is this one: will this time will be different? I hope yes, but it happens 100% on 5 occasions in 5 crises, which is a high probability. So guys, the most important is to be to control yourself on this kind of situation. Be patient and being in control, and be aware of what is going to happen and what to do. So myself, one of the things I do in this kind of situation is actually, I don't like to invest in bonds, I don't like to invest in other things in crisis situations. I'd rather to stay on cash, and that is more my safe way of doing it. Okay, so just for final slide, I want to make sure all of you history guys know about this. History doesn't not repeat it, perfect, and it's off the rims. Okay, I just want to make sure this is again clear. So now I would like you to ask one question to all of you. So I would like you to thinking about all this and tell me what do you think. I would like you to do one more final slide to make sure it's represented very clear, and then you tell me what do you think about this. And I like to make it clean and clear, and I hope this is actually finalized, or this make it as clean as possible. I try to put it all together in one place. So print it, keep it yourself, keep it safe, study, understanding. Let me know if I'm wrong, please, because I can be must be something. You say, well, but yeah, the oil need to go up first. Okay, fair enough. This must to happen first. Okay, perfect. Yes, it's true. So I don't know if there is things I'm missing out, but if there is something else that you're thinking that is not being covered or understand it, or that you have more questions, let me know. So remember, this is part of recognition, and it happens in 5 occasions, and it's go up, down, and there we are in a crisis. Okay, so up or up, and then we are actually have a crisis. Then we have the price of oil going down drastically. So guys, hope this is clear for all of you. Be patient, be ready, and just do what you have to do is to be patient and take control of your investments and take care about yourself. Guys, see you in the next video. Bye now.